morning. It's actually Monday morning. I decided to wait until the markets opened before I did my weekend webinar this week because we had the non-farm payroll number out on Friday. And it was vastly out of line. It was a very strong number, a huge number of jobs gained in the month of July, and it did have a significant impact on the stock markets and some of the forex markets and the commodity markets. So I'm going to go into that in a little while. Firstly, if you're not a subscriber, please do me a favor, visit my website, daytradeideas.co.uk. We have an excellent service there. We have my online training course. If you really want to learn how to trade, if you want to learn everything that I have learned in the last 35 years of trading, it's all in there. You can book a free mentor session with me as well. No charge whatsoever. Get your questions ready. Tell me what your problems are with your trading and I'll help you sort them out. Go to my blog. Interesting articles there from an education perspective, and there's also weekly blogs covering some analysis and trade ideas for you, all free. Okay, so have a quick look there. Now then, and if you do want to subscribe, go to the daily analysis and signals, see what I offer, and you'll get a report every day with trade ideas and signals. Now then, enough of that. Let's go to my to my charts and try and find some trade ideas for you. Okay, we're going to start. Firstly, it's summer, and although there's quite a lot going on in the economy with unemployment numbers and CPI numbers, and of course Federal Reserve raising rates, well, most of the central banks around the world raising rates, there's still a lot of sideways action. Now, if you're a scalper and you like trading sideways markets, I'm going to give you some ideas. Look at this. The pound versus the New Zealand dollar has been trading sideways for at least 3 months. So it's very easy to find some trading parameters. We've got the upper trend line here around 195.65, lower parameter around 190.65. So there we go. We've got about a 500 pip range. Now, we're not always touching one end and then dropping to the other end. So if you were to, for example, sell up at the upper end, you probably want to be taking some profit in the middle. That would be good enough, wouldn't it? No one's going to say no to 200 pips. And then if we do get down to the bottom end of the range, you can try buying into a long position and seeing if you can take another 200 pips. You know, you've got to learn to trade these sideways markets. I don't like them. And quite frankly, well, I look for direction, I look for breakouts, I look for trends, and we're just not seeing a lot of them. Look at this New Zealand dollar CAD. Now, we are in a longer term bear trend. There we go. Look, when I scrunch it up, we are in a longer term bear trend, or at least we have been since 2021. So, and to me, when you look at it like this, you know, it looks like this is a bear flag. So it just looks like we are seeing a gentle recovery in the bear trend, and eventually we will break lower. So that's the New Zealand dollar versus the Canadian dollar. Get that on your chart, get that chart on your screen, put your flag trend lines like that. It's very clearly, you know, this does look like a flag, doesn't it? So a break to the downside would basically be a break below 80.30, 80, let's say 80.20. And that should send us probably hurtling towards 79.10, 79.00. A retest of the July low would be the most likely scenario in that case for the New Zealand dollar versus the Canadian dollar. Of course, we break up above the upper trend line, which is 81.70, 81.80. That could be more bullish, but this to me looks like your classic bear flag, because we're in a bear trend, bear flag pattern. We'll see if that works out. Pound versus the yen, very much in a sideways trend, as you can see. Actually, I've just drawn that trend line there, but really the trend line goes back to March, joining the low in May. And you can see it is catching the downside there, but we're definitely developing, well, we're already in a sideways trend, aren't we? I'm guessing that will start to narrow. So I would also put a trend on here, trend line on here. There you go. Then you get your parameters of maybe where the scalping levels are. So 165, I'm going to call it 165.60, 165.90. We've got some support down at 161. Let's call that 80.50. You know, and then if you can get get a trade on there, short at the resistance or long at the support, and then if you can get out in the middle of the range, which I guess is around the 163.5 area, then you're looking at some decent profit in that. But you know, you unfortunately, I'm seeing a lot of this at the moment. A lot of sideways action. CAD again, look at that, you know, very much sideways. For me, it's really only the trend lines that work here. I mean, this could be a little bear flag, but it's not big enough for me to get excited about it. Euro versus the New Zealand dollar. This is very much a sideways trend. You know what? I'm not even going to bother with that one. I just wanted to go through some other pairs that I don't normally do analysis on every day. Again, look, this is a pound versus the Swiss, very much sideways. Well, the pound, So here, it's all a case of trend lines again. What have we got? What kind of pattern can we identify? Maybe I could call this a descending triangle. It's really more of a wedge, isn't it? But we can still trade these parameters. We're clearly trading within these trend lines. I could probably put another trend line on here, actually. Maybe there's a case for that one. And that actually coincides quite nicely there. Look, they're intersecting. So again, resistance around 116.85, 117.05, break above, let's say 117.20 could be a buy signal, but we are in a bear trend, so I would favor a break to the downside eventually. But we do have support in the low 115 area. So get used to scalping. It's summer markets, and we are trading mostly sideways. Look, there's another one. Pound versus the Aussie, very much in a sideways pattern. Great if you're a scalper. You can just leave your orders in, see where you get hit, see if it travels up to the resistance. You don't have to watch it, and then see if you can take a couple hundred pips out while risking 30 pips. Anyway, let's get back to what I normally do. We'll start with the dollar index because I just want to get my teeth into some dollar pairs. You know, the dollar and the US economy is very much a focus at the moment, isn't it? With Federal Reserve being quite aggressive about interest rate rises, the economy doing quite well as far as jobs are concerned, of course, but that is not good news for inflation. Inflation is pushing higher, and that jobs report is only going to increase worries about aggressive Fed interest rate hikes going forward. And we've got the CPI number on Wednesday, so that will be quite crucial. This is what we're waiting for this week. Right, so the dollar is in a bull trend. The dollar very nicely held this trend line here that I have going back to the end of March. Didn't quite dip down to what would have been a lovely support level around 104. I'm going to call that 104.70, 104.50. That would have been a dream to buy in there, but we didn't manage to get to do that. We've got trend lines, we've got Fibonacci levels down there. But it was this trend line, the slightly shorter term trend line, and the 50-day moving average that caught it. Now, if you're a subscriber, I did send you that chart during the week, so you would have been aware that that was the big support level. And if you did buy into the dollar, you did quite well, especially if you ran it over the US non-farm payroll number, which of course I don't advise doing. It's a gamble, but it would have paid off. So I'm assuming the dollar will maintain that bull trend. So we'll look at some dollar pairs and see how that translates. Well, the euro versus the US dollar is in a very irritating sideways trend, not something I like. Again, let's just expand this out on the daily chart. We can put some trend lines on here. If you fancy a scalp, then, you know, get in, get out, get in, get out. We've got some trend line there. I would say a trend line here. Sooner rather than later, this has to break, of course. Now, I think it'll probably break to the downside, as I say, because I think the US dollar is going to increase in value. And I think that, well, we are so clearly in a bear trend for this market, so clearly that you've got to bet that a move to the downside is the most likely scenario. This I don't see as a bottoming pattern at all. I see it as a consolidation. So we've got good fib support. Now, if you've been trading this with my report, you'll have done all right, because I've actually identified the sideways channel quite early on. And really, it was just a case of trading the fib levels. So that sort of 101.50, 101.30 level, if you were wondering where I got that from, that's just from that fib level. We overran it initially, but it's been holding quite well. And now we've even got a trend line. And of course, I had that level around 102.70, 102, what did I have? 102.50, 102.70, something like that. That's also been working well. There's nothing I can say. We've got to wait for the breakout. Aussie dollar, of course, in a bear trend with a strong dollar. More recently, there's the picture. That's it. That's the one with my fib levels on. Now, I had a really nice resistance level here around the 70.5 area. That worked beautifully. I hope you managed to get the short off there last week. That worked really nicely. The support level here hasn't worked. We broke below it, although we didn't close below it yet on a daily basis. So we'll see if that holds on a closing basis, as I say. But, well, I thought this was a bear flag, and it could still be. It's a slightly awkwardly shaped one, but I still would favor a move to the downside eventually. It's just really tricky. You know, up one day, down the next. Yes, we did crawl higher, but I really don't. These patterns, you know, these channels where we go up one day and down the next, they really irritate me. Anyway, look, we're trading below the 50-day moving average. We've broken below that trend line. We are in a bear trend. That resistance level up there really did hold quite nicely. If we retest it around the 70.5 area, should be a strong resistance level again. We've even got the 100-day moving average drifting down towards there. So if we were to crawl up, say we had a weak CPI number during the week, for example, and the Aussie did shoot up towards that area, I would imagine that will again be a strong resistance level. I do have two resistance levels on today's spreadsheet of trade ideas, as you've probably already seen. Right. New Zealand dollar, this resistance level didn't hold initially, around the 62.90, 63.10, but it did hold eventually. So I think, again, pressure to the downside, looking for a stronger dollar. 50-day moving average now, the market didn't really manage to get above there, not for long. The bull flag, the bear flag seems to be playing out. Fooled me a little bit with a break here, but we didn't close below the lower trend line. Certainly on Friday, we definitely did. Now the question is, do we break below this trend line here, which is around 62.30? This trend line going back to, where is that, April? Yeah, I just think it's quite negative on the downside. Last week's weekly candle actually slightly negative, not quite a bearish engulfing candle, but we did get a new high and a lower close. So of course that's not particularly positive on the weekly chart for the New Zealand dollar versus the US dollar. Now we had a lovely trade in the US dollar versus the Canadian dollar, buying down here at around 127.95, 127.75. That was a beauty, nice recovery off there. How long did you run that long for? Well, hopefully you made at least 100 pips out of that trade. It will be a good resistance level, but we're nowhere near it, and we really took off. The dollar took off against the Canadian on that non-farm payroll number on Friday. Now, I'm lost. I don't know what to make of this chart. Basically, we are in one huge sideways channel. So again, we're kind of dipping to the halfway mark and then recovering at the moment. So the question is, do we retest the upper trend line around sort of 131.00? Of course, if we break higher, we could get up to 132.00. Yeah, I really don't know what to do with it, if I'm honest. You can see where we are. We're in a channel. We bounced off the 61.8% fib. That was my support level. It coincided with the 100-day moving average. So it was a pretty obvious big support level, and it certainly worked. Now the question is, yeah, what do we do up around sort of 130.5, 131.00? Do we reverse from there? I guess it's all down to the CPI number on Wednesday. Cable, the pound versus the dollar, also clearly in a very much in a bear trend, of course. Stronger dollar. There we go. Look at that. That goes back to anyway, whatever. Right, now let me just zoom into what's important now. A bear flag again. Bear flags, we're either seeing sideways trending markets or we're seeing bear flags in the dollar pairs. So, whoops, it does look like we've broken down through the bear flag. As you can see, the channel was very tight, very clean actually. We touched the upper and the lower trend lines quite a few times, broke lower Friday, of course, with the stronger dollar on the US non-farm payroll number. Now, we got to the trend line that I've had here for a little while, goes back to April. We've bounced off it. It's around the 120 area, 120.00 area. So it held, but we've got resistance now, sort of 121. Well, the trend line is at 121.90. The 50-day moving average is around 121.65. So that upper 121 area definitely is a resistance level. And if you believe that the bear flag has been completed and we should eventually trade down, which I think is the case, then that would be a good resistance level if we get anywhere near it. Or sell a break below sort of 1.190, 119.90 would be the break point to the downside. Yeah, 119.90, and then eventually I think we'll retest this low down here. What is that area? 117 and a half. So look, clearly a bear trend for cable. Aussie yen is clearly trading sideways. Yeah, a bit of a frustrating pattern. So again, I'm relying on trend lines here, maybe some moving averages a little bit, although the 100-day moving average isn't really having an effect at all. It seems to be, oddly enough, the 50-day moving average that is working. Now, big support level down here with the trend line and the moving out and the 38.2% fib. We didn't quite get there last week, and we've bounced off it. So if we get through 94.00, this would be quite positive for the Aussie versus the yen. Other than that, I don't really know what to say with it. This is a very awkward pattern, so I'm going to leave it. Having said that, I did actually put 2 Aussie yen trades on today's trade sheet. I got them from the shorter term time frames, but I'm not going to go into that now because I'm just trying to give an outlook for the week at the moment rather than for the next 24 hours. Euro versus the yen has bounced back to the 100-day moving average. I could put some fib levels on there to see if they coincide with anything as far as, yeah, so we've got 137.50, 130, yeah, look, the 137.5 to 134 area is the obvious resistance level for the euro versus the yen. We start getting up through 138.00. It's going to look quite a bit more positive in the short term at least. It's just very awkward patterns. I really can't get my teeth into anything at the moment. But I'm just trying to give you some trade levels anyway, at least for the week. Obviously, the 200-day moving average did work really nicely on the downside last week. a nice, what do you call it, pin bar, hammer, whatever you want to call it. Market recovered very, very quickly off there. I wasn't the only one that spotted that as a buying opportunity quite clearly. And when you look at the weekly chart, there was even more reason to be buying it down there. When you look at the 38.2% fib, which I had in there, 132.80, 132.90. So we bounced off there, and we bounced off the 50-week moving average. We bounced a little bit early, actually, a bit tricky, but there you go. New Zealand dollar versus the Japanese yen. We overran my support level. I'm not sure how relevant this trend line is, although of course it did work. Now, we've bounced up to what has been a really good resistance level last week, around the 84.5 area. I've had that on my trade sheet all week, and if you were selling into that resistance level, it certainly worked. In fact, even today it looks like it's working. 84.70 is the high since we opened on Sunday night, and we're now trading at around 84.35. So again, that resistance level at around the 84.5 level is working, and you can see clearly that if we were to break up through around, I would say 84.85, that should allow the bulls to push us up towards 86.00, 86.20. Yeah, so we could get a pretty decent jump there. What's that? That's going to be like 140 pip jump if we break through it, but clearly the resistance level is working. Okay, while I'm on the dollar pairs, I'm looking at the dollar Swiss, but I'm sorry to say I really can't make any sense of this chart pattern at all. Now, I know some of you guys trade it, and I know some of my subscribers trade it, and they do ask me to look at it occasionally, but I just can't make head and tail of this. Sometimes there's just nothing for me to say. What do you do with that? If you know what to do with that, stick it in the comments box. I need your help, because I just don't know. Well, there's no clear trend, pattern. There's just nothing going on here on the weekly or the daily chart for me in the dollar Swiss. So please help me out if you've got a plan for that pair. Now, gold's been a bit tricky. I had resistance up at 1775, was my resistance level on the way up. Now, gold fooled me with this spike up here, or when was it? It was early last week anyway. We got up to 1787. We got up, we hit some selling, the market closed lower, almost a bearish engulfing candle. So that rang some alarm bells for me. I thought, okay, we're overbought. We're in a short-term bear trend. We've got that massive double top on the weekly chart that I've talked about for weeks. I thought, right, that's it. Gold has turned. We overran the my resistance level, but then we posted this negative candle. Anyway, then now we burst higher again. So it's really tricky, this little patch here. Very tricky. I'm kind of betting on 1770, 1765 being a support level now, and it certainly did work on the dip on Friday. It just shows you when the market gets spooked about inflation, when the market gets spooked about a stronger economy, gold always takes a tumble. Just bear that in mind with the CPI number. We get a strong CPI number, I'm pretty sure gold will take a tumble. But even if we get a weak CPI number, is gold really going to rally that strongly? I don't think so. I could argue that this is a bear flag, quite a steep one, but I could certainly argue that this is a bear flag. I think that's probably the point. Yeah. So if we do eventually break to the downside, if we do eventually break 1760, I would say, or even just 1765, really. Yeah, 1765 would be a negative signal for me in gold this week. And then I could sort of say, yeah, that was a bear flag that I spotted. The 50-day moving average offering a little bit of resistance, although we did spike above it. It's a messy picture, but what I've got to focus on is the fact that we do have that big double top pattern on the weekly chart. That's a negative. Okay, yes, we did hold a very strong support level down at 1680. That wasn't a surprise. That's where we were buying, if you remember, and we did pretty well on that trade. That will be another big support level if we get down there, but I'm not going to worry about that today because we're 100 ticks away from it right now, so I'll worry about that next week. Yeah, really, the best summary I can say for gold is that we are in a bear trend, and this is a bear flag, and we will probably break to the downside. We would definitely have to get well through. Well, look, even if we get up through the high of 1795, 1800, and you can see I've got that as a minor resistance level there. Even if we get up through 1800, let's say we break up through 1805, we're going to run into this area here. We've got longer term fibs. We've got a confluence of fibs up at 1825, 1830. We've got the 500-day moving average, and not far above it, we've got the 100, which is coming down, and the 200, which is flatlining. So I don't see a lot of upside for gold, even if we do break higher. Next week, I'll examine if we do happen to get up there, but I fancy a move to the downside eventually. Now, interestingly, we've actually had some divergence as far as gold and silver are concerned. Silver's always been the weaker of the two, or has been for quite a significant period of time. Now, I had a really nice resistance level up around 2010, 2030. That has worked beautifully. The 50-day moving average, the black line, my trend line, my fib levels, all adding weight to that level. So if you were selling into that level from the cheat sheet, from my trade sheet last week, you've been scalping quite nicely. Hopefully, I think eventually we will break to the downside. We did get down to 1955 on Friday, but we've had a strong bounce. So just watch that low $20 area. And as I said, I'm looking for a move to the downside. We've managed to get overbought now, just as gold has got overbought. And being in this bear trend, you know, that just does also make me feel that I should be in a short position, probably. The weekly chart isn't really telling me an awful lot. Not really, although the 200-week moving average is certainly doing its job, isn't it? Look, let's see if that moving average has done its job in the past. Not brilliantly, to be fair. We've overrun it quite a bit before the market turned down. Right, moving along. Quick look at oil, seeing as I'm looking at commodities. I don't really have a very strong opinion on oil. I think it's going to continue lower. It's tricky because there was no real pattern here that told me that oil would turn. Although I did manage to catch, we did manage to jump into a short, didn't we, at one stage. Now, we've got, okay, these are the reasons why I think oil will probably go down a little bit further. We've got potential moving average crossover here, the 50 crossing below the 100-day moving average. That's a longer term negative signal. You know, these crossovers are lagging indicators, but I think we can. We broke below the 200-day moving average, which was a really good support level for a while. We're not holding on to this 61.8% fib particularly well. Well, I say that. Okay, we're hovering around it. We have seen a bit of a bounce and we're getting a little bit oversold. But having broken below this trend line, which is at 90.35, I think it's going to increase pressure to the downside. I don't really have a strong opinion. If you said to me, you know, I want you to put 3 trades on right now, I wouldn't be looking to put a trade on, particularly in oil. But I do feel that we have got some more room on the downside. Now, the stock markets have actually been working really well. The DAX has been a little bit confusing. Right, you may remember, what was it now? Well, beginning of July, really. I talked about the stock markets having a good recovery. The Dow Jones and the NASDAQ had hit big important support levels, so I expected them to bounce. The S&P had not hit a big important support level. In fact, the S&P chart looked quite negative, but because the Dow chart and the NASDAQ chart look so positive, I expected a bounce back in all of those markets, and we certainly have seen that. Now, what am I going to try and do here? So again, DAX is bouncing nicely. Small double bottom there, which we spotted a while back, and that also suggested that we would get a recovery. But the real reason I thought the DAX would recover was because I thought it would get dragged up by the US markets, and it has, but it's been a painful process. It would have been very difficult to run a long position because we really have had some deep pullbacks. Anyway, we've managed to get to my resistance level at around 13,750, 13,850. Where did I get that from? The blue 100-day moving average and the 61.8% fib. Now that worked really well. Last week we backed away we really did back away, didn't we, from that exact point. So if you were selling the DAX up there at my resistance level, well done. We've got overbought and we are in a bear trend. So sooner or later, I think this bear trend will resume. I do see this as a bounce in the bear trend. I mean, there's all sorts of shenanigans going on in the US, in the German economy, in there with energy supply and whatever else. So watch for this break to the downside. Pretty clear. 13,550, 13,500 is the support level in the DAX right now. You've got that on your report anyway, or if you're watching this without being a subscriber, make a note of that level. My first support level is at 13,550, 13,500. My first resistance is at 13,750, 13,850. We'll see where we travel in between. Maybe we'll just scalp around in between those two levels before the CPI number on Wednesday, which will then give us some direction for stock markets. But it does look like it's probably a bear flag, as we're seeing in some of those dollar markets as well, in fact, and then eventually a break to the downside. I'm going to show you the FTSE. I do cover the FTSE every day. I don't know whether who out of you guys trade it, but actually the levels have been working really well. Now, when I look at this daily chart, I wonder how the hell I managed to get any decent levels out of this, because it is a mess. But it does look quite positive. We've got up through the moving averages. We are in a bull trend. I don't see this ending yet. We are overbought on the daily chart, but this isn't a strong bear trend. So it's just quite interesting. Anyway, the FTSE levels have been working, and if you haven't been trading them, it's worth keeping an eye on them if you like the stock markets. I think it's fair to say that the S&P trades have been going pretty well lately. Not been easy. We didn't get a strong bounce off that level like I thought we would, and this was a little bit confusing for me, I will admit. But once we got up through the 39.15 area, that was an obvious trigger for the market to go higher. The prices even kindly came back and retested that support level and then took off. So this is where it got interesting for me with the S&P around mid-July. So for about a month now, we've been doing quite well in that. Broke up through that was my target, 40, 80, 40, 90. Now, if you've been watching my webinars, you'll know that was my target for the S&P. We got through it, and that is now acting as support, as you would expect it to do once we broke above it. So I think we do have a platform for the S&P to continue higher. Doesn't make a lot of sense, really, when you think about the economy. Okay, yeah, the employment number is doing okay. Average earnings are doing okay, but it's all very inflationary. And I think it will all end in tears. But for now, I think that the stock markets can continue higher than the S&P. Certainly, look, Friday we dipped to my support level. I had support level at around 4,100. If you managed to jump in, that was really nice. We've already had a 40 point bounce, and I think eventually we will push up through 41.73, which was last week's high. Yeah, I feel quite positive about that. We will get some sell levels in the stock markets, and I will put them in the reports where I think we should be getting short. But for now, the NASDAQ has had a good run as expected. We have got up through the 38.2% fib. We're trying to push above there. If we can just get through this trend line, which goes back to January, so this is the 2022 trend line, if you like, that comes in at 13,333, according to this chart. So we really do need to break above last week's high for a buy signal. 13,400, we can get up through there. We can jump quite quickly to 13,650. We'll see what happens around there. Quite a good resistance level. As I say, I don't think this stock market recovery, I don't think this is the beginning of a bull trend. I think that it's a nice bounce in a bear trend. So ultimately, I am looking to sell into shorts and see the market turn lower. But for now, I think we can continue higher. Actually, on that note, I've been working on developing a robot to trade my signals, the ones that I put on the cheat sheet. I'm actually working with someone who is way smarter than I am, and he is working out how to program my cheat sheet, and so far the results are pretty amazing. We're looking at something between 30 and 50% a month. Last week was a tricky week, but we were looking at a 7% return on the model. So I'm going to hopefully be releasing that around September. So keep in touch with me if that's something that you want to get involved in. Pretty much just stick your money in an account and let the robot trade for you. The robot will obviously be trading the levels that I manually pick, that I hand pick myself in an exercise like this, but you won't actually have to trade it yourself. Okay, Dow Jones getting tangled up in the moving averages. Again, I think we can probably push higher. I think this is just one of these consolidation patterns that we see when the markets push up. I think eventually we will get up. Now look, 34,000 would be a real nice target. 33,800, 34,000 would be a real nice target, but there is a lot of resistance up there. So we'll examine that maybe next week in the webinar. I think that's it really. I'll have a quick look at crypto. As you know, I've been calling crypto lower all of this year. I have been right about it. I just don't see it taking off. This is probably some sort of bear flag situation here. Crypto bulls have had plenty of opportunity to try and get their teeth into this market and engineer a bounce, and they're just not able to do it. I think interest in crypto is dying. Ripple's got real nice resistance areas here, which is holding. Ethereum, even Ethereum can't seem to recover. We've managed to get above the 100-day moving average for the first time. Okay, slightly more positive for Ethereum, but I really wouldn't be piling into this myself if I'm honest. I would need to see some more bullish signals. Look, I mean, this again could be a bear flag. Let's put, oops, that trend line isn't going to work. There we go. Okay, well, for now, it does look okay for Ethereum. If I had to be long or short, I would be long around the 1700, 1650 area. I would be long with a stop below 1600. That probably is worth a gamble. And we could see up to 1800, 1900 area. So you could be risking sort of 50 ticks to make 100, maybe 150, maybe 200. That's not out of the question. That's the best I can do for the crypto markets. Okay, if you like what I do, please share, please subscribe, please make sure that you catch my videos. I'll try and do it. I'll do a midweek one on the CPI number just to give you an update of on my thoughts for the markets. I've covered everything there today in 30 minutes, so I'm pretty pleased with that job. Please have a look at my website if you're not a subscriber, daytradeideas.co.uk, and we will talk again after the CPI number on Wednesday.